This bear market is barely 4 months old, and though it's following the usual bear market roadmap, I have to admit that this winter feels a bit more chilly and bitter. But the death of Bitcoin and the collapse of crypto has been predicted many times over the last 12 years. It has punched, stomped, beaten up all crypto natives and crypto tourists alike. So without further ado, let's hit it. I'm Alexander F. Onilere from Caliban Crypto. An article in the Economist by Buttonwood has an outsider's perspective and why this fall from grace feels so punishing. Roll the clip.
Chill winds have been battering America's eastern seaboard for weeks, driving temperatures in places to their lowest in decades. But that has nothing on the deep freeze into which investors have shoved crypto assets. The value of a Bitcoin has dropped from $124,000 to around $70,000 today.
It used to go down to 80%, 90% during the bear market.
And the market value of all cryptocurrencies has fallen by more than $2 trillion. Though the asset class has slumped before, its boosters now seem more despondent than ever. In some ways, the extent of their misery is puzzling. Bitcoin's 45% plunge is by no means the deepest on record. From a peak in late 2021, its price fell by a whopping 77%. It took around 3 years for the crypto industry's market value to reach a new high. Then, starting on October 10th, around $19 billion worth of leveraged bets on crypto were quickly liquidated after falling deep into the red.
This happened on October 10th when Bitcoin plunged by 19 million plus, and we were all taken by surprise. I personally lost a lot of money in small leverage trades. I only used about 2x and 3x. Still, the whole swamp was drained and wiped everything out. ETFs issued the beginning of the entry of the kind of TradFi, and it was supposed to take us to Valhalla, only for a while.
The advent of crypto exchange-traded funds, or ETFs, in 2024 was supposed to support prices by broadening the pool of potential buyers. It worked for a while. The iShares Bitcoin Trust ETF, or IBIT, became the fastest-growing ETF in history, with assets worth almost $100 billion by October. Now, though, ETFs are pulling prices down. Over the past 80 trading days, IBIT has seen outflows worth $3.5 billion, its first extended sell-off.
No one was safe.
Most of the capital invested in the fund has now suffered losses. For some firms, crypto's newly stodgy reputation has upsides. Institutionalization has helped issuers of stablecoins, which ease digital payments. Assets like Bitcoin, though, have lost their cool allure, while gaining little in return. They might seem to be part of the system, but they have not actually been adopted by it. Professional, straight-laced investors still eschew crypto. A survey by Bank of America in September suggested that the vast majority of fund managers had no allocation to crypto at all. The digital assets that once promised an alternative to fiat money have been left out in the cold.
The article goes on to say the intangible, unquantifiable vibe is probably gone out of crypto and Bitcoin.
The final factor weighing on crypto is the hardest to quantify. The vibe is off. For a speculative asset class with no fundamental value or income-generating potential, intangible aura is everything. And the aura of excitement that once surrounded digital assets seems to have vanished. That is partly because they have lost their rebellious streak. If America's president and his family are knee-deep in an asset class, how countercultural can it be?
Meanwhile, the Trump family's inroads into crypto has grown by 3.5 million. You draw your own conclusion. And even though Melania Trump, Eric Trump, regale us with tales about how banks closed their account after the last presidency, it's still hard to see them as outsiders.
Charles Hoskinson, a co-founder of Ethereum, a blockchain platform, put it well last month. We all basically became part of the system, and you know what the system does when you become part of it? They make it not cool.
Crypto is not cool anymore. It's no longer the outsider, and so it's not hot. And AI is the new black.
The forces driving such a volatile and speculative market are always somewhat mysterious. For some firms, crypto's newly stodgy reputation has upsides. Institutionalization has helped issuers of stablecoins, which ease digital payments.
Could it be that crypto has lost its cool and TradFi only see the benefits of stablecoins with the quick and easy to transfer across world banks and stuff, and also the kind of TradFi see the yield that you can get from stablecoins compared to the traditional banks?
Assets like Bitcoin, though, have lost their cool allure, while gaining little in return.
But even I have to admit that this winter feels a bit more chilly and bitter. To quote the article, unless the vibes improve, do not expect a thaw soon. This is Alexander F. O'Neilary, easing my way back into crypto in 2026.